Well, we're back with you on a busy Thursday here. I'm Marlon Bowling with you, your tour guide to the ag commodities. Let's get you updated on our current grain trade first. Our quotes are provided by Bar Chart, and we'll go ahead and take a look at this July contract right now. It is showing July now trading at $6.06 and a quarter. So that would be 2 higher. Now you have all the other contracts, this just like yesterday, if I recall. All the other contracts are lower. You have December corn going down by 4 1/4 cents at 5.26 1/2. Let's take a look at soybeans and see what they're doing then. Are we having a split decision there? Well, we are. July now 6 higher at 13.66 3/4. Then you have November 2 3/4 lower at 11.75 3/4. Well, in the wheat market in Chicago today, we have July now 5 1/2 cents higher. We're at 6.22 1/4. In the Kansas City trade that got walloped yesterday, you have July now up 7 3/4, but it's only up to 7.95 3/4, still way under that $8 benchmark. And on spring wheat in Minneapolis, July is 13 1/2 higher at 8.07 1/2. Pretty good performance being turned in here in the spring wheat this morning. In cotton, we're also showing a divided direction here. July now down 60 at 84.41. And December cotton up 6 points at 81.29 per pound. We are joined by Ted Seifried of Zaner Ag Hedge. He's located in Chicago. So we had the weekly export sales numbers that came out this morning, and we have the WASDE report coming up tomorrow. Globally, things seem kind of quiet. I mean, yeah, we're still dealing with that dam issue in Ukraine, but everybody's blaming everybody else, so nobody knows what to make of that. Maybe increased tensions in the Black Sea region there. But other than that, what are we trading on today?
Yeah, that dam issue is not a great thing from a whole bunch of perspectives.
Yeah.
But, what's interesting is that, like you said, we had export sales this morning. We have a report tomorrow. Export sales weren't great. I mean, by any stretch of the imagination. Corn had new crop cancellations, meaning corn export sales for the week were virtually zero, or just 70,000 metric tons. Soybeans were a little bit impressive on the old crop and new crop, so soybeans were okay. And the report tomorrow is not expected to be very bullish for the old crop balance sheet. Both expectations for both the corn and bean balance sheets to increase and carry over. Yet the July is the one that has the strength. July corn, like you said, up 3 1/4, while December corn down. July beans up 6 1/2, while November beans down. So that's a little bit curious. You can say that with better weather forecasted and a potential change in the weather pattern, that's keeping pressure on the new crops, but it doesn't explain the strength in the old crop. So that's interesting to see. What I will say is that I do feel like July soybeans are fulfilling a technical objective. We have this downward trending channel that we've been in, well, really since the beginning of the year. You have this upper end of this downward trending channel, which, once you start to bounce off the low after the reversal higher day that we had over a week ago, it sets in motion a technical pattern, right? And so yesterday's high, and then also today's high, is the top end of that trending channel. That could be it for the July beans, and it can turn and possibly go lower. And I would expect it at some point to make new lows if it does that. So keep a close eye on that. Another interesting thing about the July strength, it's in the bean complex. It's meal and oil kind of trading off on which one leads the strength. 2 days ago, it was oil. Yesterday, it was meal. Today, it's oil again. So the products, all in all, aren't really going anywhere, but they're taking turns boosting that July contract. To me, that says we probably don't have a whole lot of legs behind the strength in the July contracts. But, we'll see. It's a very interesting trade.
That's an interesting point, because this morning on the soybean oil for weekly export sales, we had a net reduction of 200 tons overall. So, yeah, that's a good point you bring up. Very confusing. We'll come back and take a look at our livestock trade with Ted Seifried in just a moment. Okay, as we turn our attention over to livestock right now, we'll begin with a look at live cattle futures provided by Bar Chart, and on the big board here for live cattle, we are mixed, mainly weaker. Now that nearby June contract that's set to expire here real quickly, it's up 40 cents, but all the other months have turned lower again. This has been a wishy-washy affair today. We've been lower and higher. August now at 172.92. Okay, that's 27 lower. We had been as high as 174.15 and then sold off of that. We rallied a bit and then sold off again. On the October contract, we're now down 32 cents right now. On the feeder cattle, well, here, they really don't know which way to go. August down, now up 52. I can't keep track of this. They're up 52 at 239.62. September is up 27 at 242.55. And then you go to the deferreds, and they're all lower, so take your pick. November down 47 right now at 245.32. Don't know what's going on here with the cattle. Lean hogs, you have the July contract 7 higher at $87 even, and then you go to August, October, and December, they're all over $1 weaker, although July is higher. I don't know, I just have to throw up my hands here, Ted, when you talk about the livestock trade. What's your opinion? What are we witnessing today anyway?
Yeah, so you look at June live cattle, it's very reluctant to go down despite its outside reversal down day yesterday. Actually, the outside reversal down days were more prominent in the deferred months, and they are following through just a little bit. But June's reluctant to go down because cash is flying. Like you said, record cash trade seemingly every day we trade. And we've got a fairly sizable discount to cash in that June contract. So that's going to be kind of held in there. The problem is that we are very, very overbought after the recent, 5-6 trade sessions where we've just been straight higher, making new contract highs every day. And when you get super overbought like that, we're due for not necessarily a correction, but at least a bit of a breather. And it kind of feels like that's what we're kind of getting into, especially with that reversal lower day that we saw yesterday. Yeah. That was a red flag to say, hey, let's take a little pause here. I don't know if cash will take a pause. So therein lies the problem. The futures charts might want one thing and cash might do something completely different. So we'll have to watch that closely.
Well, I appreciate you. I appreciate you spelling that all out. And yeah, maybe we coined a new term there, uber overbought. I don't know. We'll have to see. Anyway, great comments today, Ted. Always a pleasure to talk with you. I appreciate the time. Ted Seifried of Zaner Ag Hedge with us here from Chicago. Uber overbought. That's kind of catchy.